All right, so are you ready to jump into another deep dive?
Always excited to dig into some interesting data.
Well, today we're putting on our investor hats. Going to be looking at CPKC's recent performance through that lens. You know, how's the company looking from that investor
It
perspective?
should be fascinating. They've had a pretty eventful year, haven't they?
Yeah, definitely a lot going on. So we've got all the Q3 2024 earnings reports, presentations, all the supplemental data, the whole nine yards.
A lot to unpack there for sure.
Definitely need to be breaking it all
Yeah.
down. So we'll be trying to answer those key questions for investors.
Yeah.
What were the major takeaways from this quarter? How are they positioned for future growth? And of course, what are those risks and opportunities that we should be thinking about?
All the important stuff.
Exactly. Now, I know these reports can be a bit dense sometimes, like wading through a sea of numbers.
Yeah, definitely not light reading.
But we're going to do our best to translate all that financial jargon into plain English and pull out those key insights that investors really care about. So first up, let's zoom in on their Q3 performance.
All right, sounds good.
Okay, so first thing that jumps out at me, revenue's up 6%. They had $3.55 billion.
Not bad at all,
Is that-
especially considering all the challenges they've been facing.
Yeah, their CEO, Keith Creel, he even mentioned some temporary headwinds in the report. What exactly are those headwinds, and how are they impacting CPKC's ability to keep those revenues climbing?
Well, fuel prices always a roller coaster for transportation companies. Then you've got competition from trucking and maritime shipping, and of course, always that possibility of labor disputes looming in the background.
So it's like navigating a ship through choppy waters. But CPKC seems to be steering the course pretty effectively so far.
So far, so good. Yeah, their earnings per share tell a similar story.
Ah, yes, EPS, that magical number that investors love to see grow.
Exactly. And it did grow. Diluted EPS up 7%, reaching 90 cents a share.
Solid. But I did notice they also highlighted something called core adjusted combined diluted EPS, which was even higher at 99 cents. What's the difference?
Right, so that core adjusted figure that excludes certain one-time costs, mainly related to the KCS merger and a few other specific factors, gives investors a clearer picture of their core performance, sort of filtering out the noise.
Okay, so it's like a special lens that magnifies their core profitability.
Precisely. And what's really exciting is that they're projecting double-digit EPS growth for the full year 2024.
Now, that's a bold prediction. What's fueling that optimism? Are they just being hopeful, or are there concrete factors driving that?
It seems to be grounded in two key drivers. First, the synergies from the KCS merger. Remember that created North America's first single-line railway spanning all three countries.
Right, a massive undertaking.
For sure. But the integration seems to be going well. They're achieving operational efficiencies, streamlining things, saving costs, all of which helps the bottom line.
It's like they took two separate train sets and connected them to create this super efficient transcontinental railway.
That's a great analogy. The second driver is simply the fact that they're in an industry that's experiencing strong growth overall.
So they're riding a wave of industry-wide momentum.
Exactly. And their unique network reach across all three North American countries that gives them a real edge. Plus, they're forecasting mid-single-digit growth in revenue ton miles.
Wait, back up a second. Revenue ton miles? Did I miss that memo?
Sorry, revenue ton miles or RTMs, that's just a measure of freight volume. You know how much freight they're moving and how far?
Sure.
So basically, they expect to be shipping more goods over longer distances.
Okay, streamlining operations, expanding their reach, anticipating more business. Sounds like a recipe for growth.
It does, and they're putting their money where their mouth is. They've allocated $2.75 billion for capital expenditures in 2024.
That's a serious chunk of change. What are they planning to do with all that money?
Investing in infrastructure, modernizing their fleet of locomotives, embracing new technologies, all aimed at supporting future growth and boosting efficiency.
Like building a bigger, better engine to power their growth. Speaking of building for the future, I've noticed CPKC keeps mentioning sustainability in their reports. What are they actually doing in that space? Are they just talking the talk or walking the walk?
They seem to be walking the walk. They've got a comprehensive plan called their Commitment to Climate Action. Includes some pretty concrete targets and initiatives.
Okay, so what are some of the key elements of this commitment? What are they doing to actually green their operations?
One of their main goals is to reduce locomotive emissions by 36.9% by 2030.
Wow, that's ambitious.
Yeah.
How are they going to achieve that?
They're exploring all sorts of innovative solutions, biofuels, hydrogen-powered locomotives. They're already running trials with biofuels in British Columbia, and they actually completed the first line haul test of a hydrogen locomotive.
Hold on, hydrogen locomotives. That sounds like something out of a sci-fi movie.
It does sound a bit futuristic, but it's becoming a reality. They're actively collaborating with industry groups like the Clean Fuels Alliance America to develop and test these clean energy solutions. And importantly, they're not just focusing on technology, they're also investing in communities that are impacted by their operations, recognizing that sustainability is a holistic thing.
So not just building a better engine, but making sure that engine runs cleaner and benefits the communities it passes through.
Exactly. They understand that long-term success is about more than just profits. It's about operating responsibly and making a positive impact.
Okay, so we've covered a lot of ground. CPKC is generating solid revenue growth despite some headwinds. They're projecting double-digit EPS growth for the year, and they're making strategic investments both in terms of infrastructure and sustainability.
Right.
But before we get too carried away with the positives, let's put on our critical thinking caps for a moment.
Always a good idea.
What are some of the potential risks and opportunities that investors need to be aware of when they're evaluating CPKC? What are those factors that could make or break their success in the coming years?
Well, that's a great question, and there are definitely some things to consider.
All right, so we've gotten a pretty good overview of CPKC's performance and their strategy. But now let's roll up our sleeves and dig into the nitty-gritty of their financials. Let's see what these numbers are actually telling us about their financial health and what it means for, potential investors out there.
Sounds good. Let's start by taking a close look at their balance sheet.
Okay, balance sheet time. This is where we get to see what they own, what they owe, and what's left over for the shareholders.
Right? Exactly. Think of it as a snapshot of their financial position at a specific point in time. And for CPKC, as of September 30th, 2024, they had total assets of $45.08 billion.
Okay, so their assets have grown since the end of 2023 when they were at $42.26 billion. That seems like a positive sign, but I'm always a bit wary of debt.
Yeah.
How does CPKC's debt situation look? Are they drowning in loans or are they managing it responsibly?
Their long-term debt, including the portion due within the next year, stands at $21.91 billion.
Okay. That might sound like a lot to some people, but I guess it's all relative, right?
Exactly. They're a massive company with a huge asset base, so we need to look at it in context. One way to assess their debt situation is to look at their long-term debt to net income attributable to a controlling shareholders ratio.
Whoa. Slow down there.
Where
Long-term debt to net income attributable to controlling shareholders ratio. That's a mouthful. Can you break that down for us simple folk?
Sure. It's basically a way to measure their ability to pay off their debts using their earnings. A lower ratio generally means they're in a better position to handle their debt load. And as of September 30th, that ratio was 6.2.
6.2. Got it. So their debt has increased, but their earnings have grown too.
Yeah.
Makes sense. What else should we be looking at on the balance sheet?
Well, shareholder equity is another important element. That represents the portion of the company's assets that belongs to the shareholders after all debts and liabilities are paid off.
Okay, so it's like the shareholders' slice of the pie.
Exactly. And as of September 30th, CPKC's shareholder equity was $44.14 billion, which is a significant chunk of their total assets.
Okay, so high shareholder equity. That sounds like a good thing.
Generally, yes. It indicates the company is financially stable and well-positioned to weather economic storms.
Got it. So we've looked at the balance sheet. Now let's move on to the income statement. This is where we see how much money they're actually bringing in, right?
That's right. The income statement tells the story of their revenues and expenses over a period of time. And in CPKC's case, their total operating revenue for the first 9 months of 2024 reached $10.67 billion.
Wow, $10.67 billion. That's a serious chunk of change. Where's all that revenue coming from?
The bulk of it comes from freight revenue, which totaled $10.42 billion. This represents a 21% increase compared to the same period in 2023.
21%. That's impressive.
Yeah.
What types of goods are they hauling that's driving this revenue surge?
Well, they got a pretty diverse portfolio. Grain, coal, forest products, energy, chemicals and plastics, metals, minerals, consumer products, automotive, intermodal. You name it, they're probably shipping it.
So they're not putting all their eggs in one basket, which is good. But are there any particular commodities that are really standing out in terms of revenue growth?
Absolutely. Energy, chemicals, and plastics are leading the pack with a 33% increase in revenue. Potash is not far behind at 23%, followed by coal at a respectable 15% growth.
So they're capitalizing on the energy boom and the increasing demand for those materials. Makes sense. But revenue is only half the story. What about their expenses? Are they managing to keep costs under control?
That's a crucial point. Let's dive into their expenses. So their total operating expenses for the first 9 months of 2024 were $7.05 billion. This represents a 3% increase compared to the same period last year.
3% increase in expenses while revenue is up 21%. That sounds like a healthy trend.
It does suggest they're managing costs effectively and maximizing their profitability.
So let's break down those expenses a bit. What are some of the big ticket items?
Well, compensation and benefits are always a major expense, and for CPKC, this totaled $1.92 billion for the first 9 months. Then you've got fuel expenses at $1.29 billion, which is understandable given all those diesel locomotives. And materials, equipment, rents, depreciation, and amortization are all hovering around $300 million each.
So managing labor costs and fuel efficiency are probably key areas of focus for them.
Absolutely. Those are big levers they can pull to impact their bottom line.
Now, remember that big $2.75 billion capital expenditure plan we talked about earlier? The one where they're investing in all that infrastructure and modernizing their fleet? Is that starting to show up in the financials yet?
Yes, it is. In their cash flow statement, we see additions to properties totaling $2.08 billion for the first 9 months. This reflects those investments they're making to upgrade their network and enhance their capacity.
Okay, so they're spending money to make money. It's like investing in a bigger, better train set to haul even more cargo. Makes sense to me.
Yeah.
But how's all the spending impacting their cash flow? Are they able to generate enough cash from their operations to fund these investments?
That's the key question. And the good news is their cash flow from operations for the first 9 months was a solid $3.57 billion.
Okay, so they're generating a healthy stream of cash. That's a good sign. They're not just relying on debt to fuel their growth.
Exactly. This robust cash flow gives them a lot of flexibility to invest in growth, pay down debt, and maybe even reward shareholders through dividends or buybacks.
And now you're talking my language. Dividends and share buybacks are always music to an investor's ears.
Yeah.
But before we get too excited, I'm curious about their core adjusted combined operating ratio. What exactly is that, and what does it tell us?
Yes, the core adjusted combined operating ratio, or CASCO as it's sometimes called. It's a key efficiency metric in the railroad industry. Essentially, it measures what percentage of their operating revenues are eaten up by operating expenses.
So a lower ratio means they're running a tighter ship and squeezing more profit out of each dollar of revenue.
Precisely. And for the first 9 months of 2024, CPKC achieved a core adjusted combined operating ratio of 60.7%.
60.7. Is that good? Bad average? Give me some context.
It's actually pretty good. It suggests they're managing their costs effectively and generating a healthy profit margin. For comparison, their operating ratio for the same period in 2023 was 59.5%.
So slightly less efficient than last year, but still within a healthy range.
Exactly. And it's important to remember that no single metric tells the whole story. We need to look at all these pieces together to get the full picture.
All right, so we've looked at their balance sheet, income statement, cash flow. We've even dug into some of those fancy financial ratios. What's the verdict? Is CPKC a financially healthy company?
Based on what we've seen so far, the answer seems to be a resounding yes. They've got a solid track record of profitability, good cash flow, and a manageable debt load. Plus, they're investing strategically for the future.
Okay, I'm liking what I'm hearing. But you know what they say? No investment is without risk. So let's not get too carried away with all the positive stuff. What are some potential red flags that investors should keep in mind when they're thinking about CPKC?
That's a great point. It's always crucial to consider the potential downsides. And in CPKC's case, there are a few things that warrant a closer look.
Okay, so we've really dug deep into CPKC's financials, and they seem to be in pretty good shape. But you know what they say? Past performance doesn't guarantee future results. So let's shift gears a bit and look at the bigger picture. What are some of the trends and forces that are shaping the future of the transportation industry, and how might they impact CPKC's long-term prospects?
That's a really important question. We can't just focus on the numbers today. We have to think about the long-term trends, those things that can really make or break a company's success.
Absolutely. So what are those big looming trends on the horizon? What should investors be keeping an eye on?
Well, I think one of the most significant trends is the rapid advancement of technology. We're seeing a transportation revolution happening right now, driven by things like automation, artificial intelligence, and data analytics.
Right, self-driving trucks,
Yeah.
drones delivering packages, all that futuristic stuff. It's exciting, but also a little bit unsettling. How do you see this wave of technology impacting a traditional railroad company like CPKC?
It's a double-edged sword. On the one hand, these advancements could pose a challenge to railroads. I mean, if trucking becomes much cheaper and more efficient thanks to self-driving trucks, that could definitely eat into CPKC's market share.
Yeah, I can see how that would be a concern. But couldn't CPKC also benefit from these technological advancements? I mean, they're already investing in things like hydrogen locomotives.
Absolutely. They're not just standing still, they're embracing things like precision railroading to optimize their operations and exploring innovations, like you said, hydrogen-powered locomotives to reduce their carbon footprint. Technology can be a powerful tool for improving efficiency and sustainability.
So it's a race to adapt and innovate. Those who embrace the changes will succeed, and those who cling to the past, well, they might get left behind.
That's a great way to put it. But technology isn't the only force at play here. The global trade landscape is also changing, and that's another major factor to consider. We've got geopolitical tensions, trade wars, shifting supply chains, all creating uncertainty for businesses that rely on international trade.
Yeah, it's definitely a turbulent time in the world. How's all this global uncertainty impacting CPKC? I mean, they do have a pretty unique footprint with operations spanning Canada, the US, and Mexico.
Their network definitely makes them a vital player in North American trade, which means they're sensitive to any changes in trade policies or economic conditions in those countries.
So they're almost like a bellwether for the health of the North American economy. If they're doing well, it's a good sign for the region overall.
That's a good analogy. Their performance can definitely be seen as a reflection of the economic health of the region.
Okay, so we've got technology and global trade, two big forces to watch. But what else should investors be paying attention to?
Well, the growing focus on sustainability is another trend that can't be ignored. Investors, consumers, and regulators are all demanding that companies take responsibility for their environmental impact.
CPKC has made a big deal about their commitment to climate action. But how does that compare to what other companies in the transportation sector are doing? Are they leading the charge or are they lagging behind?
Yeah, they're definitely making progress. Their goal to reduce locomotive emissions by 36.9% by 2030 is ambitious. And their investments in things like biofuels and hydrogen technology, those are commendable steps. But some environmental groups argue they need to do more to address issues like noise pollution and community impacts.
So there's always room for improvement. What are some of the challenges they face in becoming a truly sustainable company?
Well, transitioning their entire fleet to cleaner alternatives like hydrogen, that's going to require significant investment and technological breakthroughs. And they also need to find ways to balance their growth ambitions with, minimizing their environmental footprint.
It's a tough balancing act, for sure. But it seems like they're moving in the right direction.
Yeah, I think so. And that commitment to sustainability could end up being a competitive advantage. Investors and customers are increasingly looking for companies with strong ESG credentials, environmental, social, and governance.
Right, makes sense. So we've covered technology, global trade, sustainability. Three major trends shaping the future of transportation. What does all this mean for CPKC's future? Are they well positioned to thrive in this changing world?
Well, I think they have a lot of things going for them. A strong financial foundation, an expansive network, and a management team that seems to be forward-thinking.
Yeah, we've seen all that in our deep dive today.
Exactly. But their long-term success will depend on their ability to adapt to those technological disruptions, navigate the complexities of global trade, and continue to make progress on the sustainability front.
So execution and adaptability are key.
Precisely. The transportation landscape is changing fast, and only the companies that can keep pace will ultimately survive and thrive.
Well said. I think we've given our listeners a lot to think about today. We've explored CPKC's financials, their strategic initiatives, and the broader trends that are shaping the industry. Any final thoughts you want to leave our audience with?
I think the key takeaway is that investing is all about making informed decisions. You have to carefully analyze the opportunities and the risks. CPKC has a compelling story, but like any investment, it requires research and careful evaluation.
And hopefully our deep dive today has provided some valuable insights to help with that process. Thanks for joining us on this deep dive into CPKC. We hope you found it informative and maybe even a little bit entertaining.
It's been a pleasure.
Until next time, keep learning, keep exploring, and as always, keep diving deep.